Hey guys, how are you? This is Eric Bramlett with Bramlett Residential, and today we're here to discuss the October 2024 Austin Metro real estate statistics. This month was not surprising, as most months have been this year, but we did have a bit of good news in the way of sold units and pending units increasing when we expected those numbers to drop in the face of the election. So let's go ahead and get started. Total sales increased by 6% year over year from October 2023 to October 2024. Pending and under contract units increased by 11.3%. New listings bumped up 7.9%, which brought the total active listings up 10.5% on a year over year basis, bringing months of inventory up to 5.1 months of inventory. That puts us firmly in a balanced market. It feels much more like a buyer's market. Buyers and sellers are typically most concerned with pricing, and pricing remains stable. We've been in a stable pricing environment now for over 18 months. We did see average price bump up just a very small amount and median price bump down just a very small amount, but it's safe to say that these are both negligible and the pricing remains stable. The biggest impact on pricing continues to be seasonality. Every year, like clockwork, we see prices soften in the fall and winter, and you are seeing that happen right now. Volume did tick up. That's a function of the average price increasing by a small amount and the total units sold increasing. So volume ticked up on a year-over-year basis by 6.5%. Very expectedly, pending units are dropping on a month-over-month basis. Again, moving into the fall and winter months, we see far fewer buyers in the market. We also see a lot of sellers start withdrawing from the market. Net result is just simply that fewer properties are going under contract when you look at it on a month-over-month basis. Real estate's very reliable whenever it comes to seasonality. We will always see the strongest months in the spring and early summer. New listings, you can see, also decreased, but they are following the typical trend line, as are withdrawn and expired listings on a month-over-month basis. They are increasing. We did see a tick up versus last year. Not really sure why that happened. Probably due to the fact that we have more listings on the market now than we did last year. So simply, there are more listings that can be withdrawn whenever you look at it from that perspective. Everyone wants to know what's next. So we have three things that have been affecting the market. That is election anxiety, that is a sluggish job market, and that is mortgage rates. Those are the three variables that have negatively impacted our real estate market. Election anxiety is starting to subside. It doesn't end the day after the election, but we will start seeing more confidence enter the market as the news cycle shifts. Indeed.com job postings. This shows us the trend from January 2020 to present. It kind of shows you the entire cycle. And you can see that we are in a decline, but we look relatively similar to how we looked in 2020. But if you zoom in to the past 12 months, you can see that we are still declining when you look at the number of jobs that are in the market. This is because Austin is so heavy in the tech industry, and the tech industry has been contracting. Tech industry has been in a hiring freeze for almost 2 years now. And then if you've paid attention to the news, you've seen that many major tech employers have been laying off. This is, in my opinion, in anticipation of a market swing back to the positive. The question will simply be, when will they start hiring again? But this is a major component that we need to see in our market in order for our market to return to a normally healthy and very robust growing market. Mortgage rates. We are seeing some light at the end of the tunnel with mortgage rates drop back down below 7%. It's important to understand that mortgage rates don't follow the Fed rate directly. They are heavily influenced by the Fed rate. And we did see some good news last Thursday that the Fed did drop by another quarter point. There will be some lag on this with regards to seeing mortgage rates drop, because all of the mortgage banks do price in what decision they expect the Fed to make at the next meeting. And everyone did expect the Fed to make that 0.25% rate drop. So the good news was just simply that there was no bad news. And then there was market movement after the election. There was inflation fears, and that's why we saw rates jump up above 7%. But it's nice to see them back down again below 7 at 6.9. If you look at the major forecasters, everyone expects rates to be firmly in the 6s next spring. There's a bull case, so we could potentially be in the high 5s. We're not expecting that. we expect to be in the mid sixes by next spring. The most important leading indicator is simply the Fed and what they plan to do. This is the CME Fed Watch tool, and you can see that the current rate is 450 to 475. And the majority opinion is that there will be 2 rate drops by next March, so a half a point rate drop by next March. If we see that happen, which again is likely, we will continue to see mortgage rates drop. And at some point, we will see major employers begin to hire again. So those are the 2 components you want to watch. You want to see jobs come back. You want to see mortgage rates come down. And those are the components we need to see a more robust market come back. Important to understand that 2024 was pretty bad. It was a pretty bad market. Whenever you look at units sold and whenever you adjust for population, 2024 was actually a more frozen market than the great financial crisis. What I mean by that is that there were fewer properties trading on a population adjusted basis than in 2008 to 2012. That becomes pent-up demand. So the people that would prefer to move but chose not to due to outside factors, they still more than likely want to move. And you will see that demand continue to increase, that pent-up demand continue to increase. And whenever we do see rates come down, you'll see a lot of these folks simply get off the fence and get back into the market. We do expect 2025 to be a better market than 2024. The only question is really how much better will it be? So it's important to watch all of the factors and know what kind of market you're operating in. One thing that is almost certain, and that is that the spring market will be better for sellers than the market right now. So if you're a seller and you're on the market and you don't need to sell, you can hold on for a few months. It's probably a good move to go ahead and withdraw. Most buyers are not motivated to buy in November and December. They're thinking a lot more about turkey and presents than they are about buying a home. It's also a lot more pleasant to take a pause. If you're a seller and you're in a situation where you have to sell, you need to have a pretty tough conversation with your agent and with your partner and decide where you need to go on price, because it's time to get aggressive on price if you need to sell in the next couple of months. If you're a buyer, it's a pretty normal decision to say, hey, we're just going to casually look over the holidays. It's not a lot of fun to move over the holidays. But if you're one of those buyers that wants to get the best deal out there, this is the time to strike. What's important to know is that even though on a statistical basis, you will see prices come down, and even though you will see some of these one-off amazing deals that people are able to get right now, the house that you love the most might not have a motivated seller behind it. You might have a home that you really love, but that seller would prefer to simply withdraw from the market and try again in the spring. So if you truly want a great deal, you can certainly luck out. You could find a home that you absolutely love with a really motivated seller behind it who needs to come down in price. But if you really, really want a great deal, you need to be able to compromise on the property in order to find that absolute best deal. If you're a real estate professional, long-term planning is what it's all about. It's not impossible, but it's not a great goal to try to increase your sales in 2024. What you need to do right now is plan for 2025 and just understand that the work you're putting in right now will have some delayed gratification. You will see the results of that hard work, next year. So definitely continue working hard, but just know that those will probably turn into sales, in 6 to 9 months. If anyone has a situation that you would like to discuss, I'd love to chat with you about it. Please reach out to me if you're a buyer or a seller who'd like to discuss your specific situation. I love talking about these things. If you're an industry professional and you have ideas that you'd like to bounce off of me, please reach out to me. Or if you're, in a situation that you'd like to discuss your specific business planning, then also please reach out. Business strategy is also one of my favorite topics. No matter what you do, please subscribe to the channel. And I hope that you have an amazing week. And I hope that everyone has plans for awesome Thanksgiving and the rest of your holidays. I'm Eric Bramlett with Bramlett Residential. Thank you so much for watching today.